Good morning, everyone. Welcome. Darren and Richard, JR, J Stores, Armando. Happy Friday to you. Splash, Robin. What's up? Queen, she either joins early or either she joins late around 11 o'clock New York time because sometimes she stays up and she trades the London session. No boundaries. Good morning. 15-minute breaker. All right. Appreciate that. Oh, sniper, Rodrigo. All right, we'll get going in just a minute. All right, J Stores, let's lead with that then. You said the gap from yesterday, so let's lead with the gap from both yesterday and today. All right, so far it looks like, well, we haven't opened yet, but we are now trading at 17,700. So we're about in this area, so we should get a gap about this 17,783 to, so about a 100-point gap we're looking at right now, or maybe 80, depending on what happens in the next 10 minutes. We're looking at anywhere from 80 to 100 points. and gap from yesterday. All right, so the gap from yesterday was completely traded through. You say close the gap from yesterday. Previous day gap, traded through that. Here we didn't trade through it, but we opened this one here, traded through. So it looks like, what I can see, it looks like we covered this week's gaps. But we should have one that's above us that we'll be looking at once we open this morning. Anywhere from 80 to 100 points there. Not to mention, maybe we have a little ways to retrace a little bit before price starts moving higher. So it may be a little bit larger. And so that may give us two moves, one move down, and then at least a move back up to previous day high. Yep, 405. Yeah, we'll see the gap. Well, yes, okay, now this is just a fair value gap, but not a regular trading hour gap. So the regular trading hour starts at 415. But I understand what you're saying about the fair value gap. So right now we're about this level. Let me just mark that up. And then we'll get a measurement on it. We're at 17,700. So we're in this range, right around a 38% retracement. At least a 50% will take us to 668. Obviously, full retracement takes us down to 573. All right, let me go back to electronic trading hours. There we go. There's a breaker on a 5-minute created here at I guess at the end of this session yesterday between like 6:30. I'm sorry, 4:30, and then to reopen after 1800, traded lower into 8 o'clock p.m. somewhere around there, and then price has just kind of been trading out of that as it moved back into the breaker closer to consequent encroachment. Then it's pushing lower, and it's been pushing lower with the exception of 8:30 news, um, which shot through the upper edge of the breaker only to fall back down. In fact, let's take a peek at this. We do have news this morning. We had an 8:30 news event, a core PCE price index. That came in exactly the same as forecasted. So that really shouldn't have a big impact. We did see price on the index trade up through the breaker, but it quickly retraced back down and resumed its previous trend. But we do have a revision of the University of Michigan consumer sentiment from 2 weeks ago. It's going to be revised today. They're expecting 77.9, but we'll see what comes at 10. All right, looks like we got a few additional people. Milad, Amia, Thomas, Molly. Hey, Molly. I think you've been away from us for a few days. It's healthy. Seaho. TGIF. Let's see. Possible. Possibly. We could have a TGIF. We are near the upper extremity of the weekly. Just look and see where we are. uh, too funny. Too funny. Yeah, we're right around the 20% retracement level of the weekly candle right now. So I'm not sure if we'll get a TGIF. We may get a further retracement down a little bit more, so it digs into 25, maybe 30%. But we're already at the 20% of the weekly range. 925 liquidity injection. Appreciate that, Molly. Thank you. But yeah, I recognize you haven't been here for a few days, but glad you're here. Happy Friday. Yeah, let me see. I'll quickly throw up the. It's too much lipstick here. Anyway, if you throw up, you take the weekly candle. All right, here's 20%. Tracement is at 17,692. That's exactly where we are now. So yeah, I wouldn't hold my breath on TGIF unless you want to extend it down to the 30% level, which 30% level is 17,623. 17,623. But otherwise, uh, yeah, I wouldn't worry too much about TGIF today. TGIF was essentially this fake out at 8:30 till now was the TGIF, it seems. Trachologist, what's up? Appreciate you. All right, opening bell is here. 300. I'm just waiting for now. Waiting to see what I see, as well as we do have 10 o'clock high impact news, so just keep that in mind. But anyone who saw this 8:30 open as a liquidity sweep and wanted to short the 8:30, and you're ahead by anywhere from 20 to 40 points, depending on your entry. Exactly, that 1 minute candle. Oh, I think I moved it too soon. Didn't get a closure below. Get it down to CE of, looks like a new day opening gap or something. Yeah, from Tuesday. If we get a reversal here. Oh, you got 500. All right. Okay, Molly. There you go. Ron, good morning. What's up? I don't like this breaker. That wasn't really impulse the way it should be. There was no fair value gap created. And we have news coming in 20 minutes. However, we do have consequent encroachment of the breaker. Exact same values to 830 open. One minute fair value. Okay. Yeah, I'm conflicted right now about direction, so I'm definitely not taking a position. And while we have a bit of time here, let's take a look at the other indices, see where they're trading. If we start to the far left with the dollar, we can see what the opening bell has done for the dollar. It's trading probably somewhere closer to equilibrium, and now we see it pushing. It actually has taken over an eclipse last hour high, making a daily high. And let's see which levels. So it's almost at consequent encroachment of this bearish fair value gap that it's trading in now. If that's not able to hold price, then we could see another raid on liquidity up here at 105.949. Otherwise, we'll see a reversal sometime soon in the next few minutes as it reaches the midpoint here. Yep, it's just a couple ticks away from that. So let's see what happens once the dollar reaches there. We see something very similar happening with the Dow. It's also pushing higher, not close to last hour's high, but it is pushing higher. Within a consolidation range, it looks bullish within a consolidation range. So it's not that it's moving anywhere, but it's not a bearish candle, which would be the inverse relationship with the dollar. Now, if we go over to S&P and NQ, also sort of in a consolidation range, similar to the Dow, except they are showing bearish candles for the last couple of hours. So for now, the Dow looks to be stronger than the other two. Yep, we have S&P has swept yesterday's high on the big impulse push up. NQ had an impulse push up, but it did not get the highs. These equal highs up there. 17,827. This push right here did not clear that value. We have two that has cleared it, two have not. So I'll go ahead and show that S&T here. All right, switch back over. Triple C, what's up? Good morning. Yeah, and I don't know Triple C. Someone else asked already, and I took the weekly range, and we already retraced to 20%. So just a couple candles ago, if you look at where 670 is on the weekly candle, I think 670 is a little bit past 20%. So it seems to me like from this impulse high that pushed up at 830, from there down to where we were at the opening bell, it seemed to me like 830 to 930 was the TGIF this week. Now, if we get a bullish push and we clear the highs, so we make a new high, then we can reset and start looking for, if we do see some sort of bearish signal later on in the morning or in the afternoon, then we can maybe look for another TGIF. But barring an extension of the weekly range, I don't see the TGIF happening today. Let me just run and get some coffee to make sure I'm fresh for this macro we have. So we have the macro coming in about 3.5 minutes. 10 minutes after that, we have a news release at 10. So we have a couple things coming in the next 15 minutes. I'll be right back. 30 seconds, and then we'll be at the macro period. Yeah, I definitely think we'll get there. The question is whether we'll retrace further before we get there. And so I'm not really sure, Jay. I'm just waiting for now. We have right now, we just entered the macro, and then in 10 minutes, we'll have a high impact news event released. So I'm going to wait for that to occur. And then once that occurs, then I'll start looking for where I want to go with my trading today. Hello, Giorgio. Good morning. Okay, trade above 50%. Okay. This is coming from the 5 minute. At a new low, put in, breaking this low, doing a sweep. Right. At a retracement, put in a low below this one, but no candle body, just the wicks. And then trade it above with the body. Trade it back down into consequent encroachment, which also happens to be the 830 open. They overlap today at the exact same value. And now we see a push higher. No fair value gap, so we don't have a unicorn, but we do have a breaker block set up here for the 940 candle. The 940 candle is the entry. All right, we're trading up to consequent encroachment of the wick from the 830 open. So this was the previous news event. Made a push. Yep, made a push just above where we closed off yesterday at 1610. Now there was a slight higher value put in just before close at 1645 and 1650. And that's where we haven't gotten to yet. But consequent encroachment of this wick just traded to. So we'll see now how far price wants to go. Let me find that, Robin. Wait a minute. Well, so we're bearish at the moment. At the moment, Robin, we're bearish. So we technically have a protected high, but the last low to be put in was over here. So we had this low right here, close below this previous low. Well, I'm sorry, the previous low was here, right? Because it's about the body closures. So we had this low, which was then overtaken by this low. And then while we did have a retracement and we had the wicks trade below, this wick, which was the previous low, it never put a body below it. It started retracing back up. So we have a protected high here, and the low that needs to be closed below for a continuation down is here. So 17,693. So let me just put a marker here. 6:55. Well, 9:55. Sorry, 9:55. About 5 minutes from the news event. Hello, Mass Petrochem. All right, yeah, we got a news event in about 5 minutes. So you got a few minutes. We'll wait for price to settle down after the news event. So probably 10:15 or so. I'll take off this consequent encroachment marker since we've reached it. All right, so our closure here gives us a bullish sentiment again. Closure above 17,818. Just curious, did anyone take this breaker long after the closure above? Anyone take that? Okay. Yeah, it wasn't my trade either. I couldn't get comfortable with it. Okay, Quran is in. Okay, good job. Did you get in at the top of the breaker around 750, or you get in somewhere on the inside of the breaker? Daily. All right. All right, Giorgio, good job. Happy Friday to you. I guess you're just relaxing for the rest of the day now. Oh, the 1 hour? Okay. No, Giorgio, I don't wanna add any more complexity to my trading. I'm at a place now where I'm okay and happy where it is. So no, I don't want to add anything, but you whatever you need on your chart to make you comfortable with your trading, absolutely you should do that. I get it. Sometimes you may be looking at my chart, and so you like to see some of the things you're familiar with. But yeah, I don't want to add any more. Yep, at the top. Okay, well, that's sweet. You still got it. Looks like about 50 points there on a mini. That's $1,000 and $100 per contract on a micro. All right, Triple C. It's gonna be a good lunch today. Okay, Molly, I take it you were long. Oh yes, I for whatever reason, Molly, I can't find my glasses. I don't know where I put them. They're somewhere, and I only wear them when I'm here on the stream. So otherwise, I never wear them. So I don't know. I can't find them. Maybe I'll find them this weekend. Oh, I see. Okay. All right, Giorgio. Yeah, that's just so that's another discipline. Then I would need to learn how to do the VWAP or how to use it properly, and just try my best not to add anything new. Because yeah, I just all I really need to do is just trust the setup. We're in a bullish fair value gap, right? We got a retracement down to 50%. I guess you can call this an impulse. The only thing it didn't do that I like is for the fair value gap, so we didn't get the unicorn, but we got an impulse out of. I already had this drawn up as um, a potential breaker here. We had a close above on the 5-minute chart. We had a retrace back down to 50%. So while I don't have the VWAP, everything for my setup was presented to me for me to take it. I just didn't want to do it because we have news coming and just didn't want to do it. I'm not sure if VWAP would have changed that. So trackologist, when you say you got in at 760, you're saying you got in for a short? I was following Microsoft. Okay. Yep. Yeah, Robin. I know several people who absolutely, excuse me, swear by the VWAP. It's just I've been on a long trading journey, and yeah, I'm just looking forward to not adding anything. Oh, you got long. Okay, got it. It said stopped out at 792. I was like, stopped out. I was thinking a TP, but I get it. I know what you mean now. But no, good trade though. 30 points is it's a solid one. Silver bullet hour, everyone. And bingo. It's like silver bullet already happened. If you blinked, you missed it. Silver bullet, you're always looking for 20 points. This in this case, you're gonna be looking. I would probably look for 30 just so you at least get a 1-to-1. And that's already delivered. Yep. Gave your entry at 10, at 10:02, and at 10:03 it went straight to target. Yeah, sometimes with the silver bullet, you have to be ready right at 10 o'clock because it'll grab an area that was created sometime between the opening bell and 10. Because I remember when I first started looking at the silver bullet, I used to always look for the creation of the fair value gap and all those things afterwards until there was a handful of times where I wondered where the silver bullet was, and I realized the silver bullet traded back into a fair value gap that was from the 9 o'clock hour. All right, we did have news in the last 5 minutes. Let's just, all right, the retracement's coming now. Oh, that's right. We now have, all right, so we can see the New York high and this protected high I have right here in blue, exact same value. All right, and we'll pull up our New York low. Right, just gave 20 points again from the edge, from the upper edge of the fair value gap. If you got in from consequent encroachment, just gave 30 points. Sniper, are you talking about, did you do that this morning? What's up, TJ? Good morning. All right, 40 points from consequent encroachment now. Sorry, I think we're at the new day opening gap here. There we are. This is the gap between closure yesterday afternoon and 1600 reopening. Okay, so we've had a sweep of the New York high. Let's see now where the candle body closes at. Okay, Sadia, good job. Long from 801 to 814. Wow, you got in late and still pulled some money out of it. Anyone who entered here at the breaker, it's up 70 points. Let me just check in. So dollar's pushing higher. Everything's pushing higher. It's crazy. Let's just give it a peek just so we understand what's happening. So you can see the dollar pushing. So is the Dow. So is S&P, and so is NQ. So now NQ is we're no longer looking at S&T here. So we now have them all having taken over the previous day high. So I'll get rid of these markers. Oops. One. All right, let's see if the Dow is going to be restricted by this fair value gap that it's currently inside of. Same with the dollar, whether the dollar is going to get somewhere close to the upper edge and then start to fail. Okay. The 20 seconds, see if we close above. There we go. All right, so this blue line down low, scrap that, grab the protected high, shift it down to this New York low. All right, let's see where it takes us. 20% move to the downside. Let's see if we can get through 2024. You mean on the yearly candle? Go ahead and mark up this level. Any ninja traders out there? Can someone help Miss Goody? All right, from the last retracement here on the 5 minute, let's go ahead and measure that leg. See what we're looking at as far as a retracement level. All right, so the consequent encroachment of this down wick right around 790. 50% of this leg here, if it just wants to retrace that far, is 787. So really close to where half point of the wick is. Oh, HCE, good morning. Yeah, I'm looking now to see if price wants to retrace down here to cover in and balance the price on this wick here. But I do recognize we have a bearish fair value gap just above us. So it may be that there's going to be a liquidity sweep up high, trade into the fair value gap before trading back down. And just as I say that, 1 minute bearish breaker looks like it's working. Yeah, it does. Mass petrochem. So you got to remember if on Friday you're at the end of the week. So it depends on what the weekly objectives were and if they've been met. So so that's usually what Friday's about. It's about what's ahead of you, which targets are still open that price needs to get to, and that'll drive how price action moves. We did have news this morning, 8:30 and at 10, but we're good now for the rest of the day. But price has definitely been has slowed down since it took yesterday's high. So generally, that's your target for the day is to exceed the previous day high or whatever the trend is. So if the trend is bullish, then we're looking at taking out yesterday's high, and that has been achieved already here at about 10:15 or so. And so since then, we're now looking at a retracement, and got to start trusting these setups. Anybody take the 1 minute breaker short? You took it, Miss Healthy. Good job. Sweet. Yeah, I was sitting here watching and not only wondering if that was a breaker, but also wondering if that was going to support price lower without reaching the fair value gap above. But yeah, it's right here. Oops. Trade above, closure below. Oops. Back up to the 5 minute. Get rid of this because we've traded past 50% of this wick. So the wick looks balanced now. Didn't Let's see what's the low of this wick. 781 and a quarter. Open here is 71. So it came within one tick of tapping the fair value gap. And now it's going to run up again, it looks like. So look and see if we get a close above the previous high. If we do get a close above the previous high, then we'll be shifting. Protected low, we'll be shifting up. And it'll actually make it up to 782. Yep, you're right, Darren. It's definitely a lower high, possibly. Oh, okay, maybe not. Yeah, I'm still thinking, Darren, that this 1 hour fair value gap above might be the turning point. So it still may need to reach this area. Yeah, we still got 2 more minutes on this candle, but it has rejected pretty well so far. Right at the 50% line there. Yeah, that's what was happening early in the hour. I thought maybe we would have settled down by now, where a dollar would be slowing down and the indices would be running. But the dollar is extremely strong right now in its drive to sweep yesterday's highs, which it did already. But now it's a nice bearish fair value gap above that it's probably trying to run into. And so we may actually have to wait until the dollar gets there before price moves out of this range. So maybe it'll just sit here and wait and then it'll catch up. We do have macro coming in 10 minutes, so that could provide some relief as we head into the 11 o'clock hour. Here we got a break of the level, but not a closure above. So another 2.5 minutes to see what happens there. Let me go and get another cup of coffee before the macro starts here and before this candle confirms itself, so we can then react to if it confirms just above 17,840. I'll be back in just a couple minutes. All right, I see still we have not gotten a confirmation above 17,840. You know what? Let's get rid of this. Let's see if maybe this candle. If not this candle, we do have the macro started. So maybe that'll be what pushes us through. We'll get into the bearish fair value gap. In fact, we have about 2 or 3 minutes. So let's just check in on the indices and the dollar. All right. So the dollar did its job here. It was, when I checked just 5 minutes ago, it was down here around 106 flat. And I wanted it to get into the fair value gap above. I didn't know if it would need the macro to get there, but it's already gotten there. In fact, it looks like there's 2 of them with this little darker area. So that's where I'm expecting the turnaround to where the dollar at least starts selling. Um, we have the Dow, which is also pushed above. So we need the Dow to continue to push and not reject here, because we don't have anything that's holding values back here on the S&P and NQ. Actually, we do. Let me figure out where is. Well, oh no, it's on the. This is the 1 hour chart, so it should be able to show it. Maybe I didn't have it extended. Maybe that's why. Okay, there we go. All right, I thought something was wrong with my chart. Okay, there we go. So now we have them all inside of or very near to bearish hourly fair value gaps. But what we don't want to see is for them to all move in tandem. We need the inverse relationship. So we need one of them decide to turn around and the other one decide to go. Hey, it's macro time. All right, we got a closure above as well. So because of that, we're going to grab our swing or our protected low. And our protected low now goes in between the previous high and the new high. And so the low is here. Only had 4 days. Okay. Oh, Deepak, good morning. All right. Not only did we take the high, but we did actually tap into the bearish fair value gap, which I was waiting to see. Now to the 1 minute. See what happens here. All right. So we're getting pullbacks now on all the indices while the dollar is at the high of the hour. It's still pushing higher. So maybe that's where we close for this hour, where we'll have some bearish momentum coming from the indices, and the dollar will just hopefully exhaust all of its fuel. But the dollar is running right now. Square encroachment now on the chart. We'll see how price reacts when it gets there. But right now, it looks like it's moving just as the dollar is moving. They're both at their hourly highs. So we have the Dow. I'm sorry, we have S&P, Nasdaq, and the dollar at the hourly high. We have the Dow. Just can't get right. Oh, yeah, TJ. I've had that happen multiple times. All right, there's consequent encroachment. Made it just at 11 o'clock. Let's now see what that does to price. All right, so we had the dollar open up, pulling back a bit. So that means it's probably still bullish. What is this? A 3 minute, I think. All right, since it waited until the new hour to take over this 1 hour fair value gap, we won't find out if it's invalidated or not until lunchtime. So we do want to keep an eye on that to see if price trades back in or below during this hourly time. See where. Yep. Oh, Satya. Yeah, I see where you are. Oh, I didn't realize Queen was here. Good morning. Good morning. Yep. Okay, that's great advice, Queen, for Satya. Hopefully, that's something you can implement and put into practice this weekend. But yeah, she's absolutely right on and that's what helped me out on the back testing. The more you back test it and you see that first it confirms the breaker, and then it might retrace back down, and because you might want to enter here at, like, let's say 17,830, right? And as soon as you enter, now all of a sudden it's down at 17,815, and you're underwater about 15 points, and you're wondering whether you have chosen a loser and you need to cut and run. But then you see it then build back up and deliver what you wanted. So in the future, you start to believe in these setups. Yeah, I had that one marked up this morning. I first woke up. I said, "Hey, this right here looks like this bearish breaker looks like what's been selling price off here." We had the high at the end of like 4 o'clock that build up, traded down, created a breaker. We had a poked his head up, traded below and closed, traded back in, down, back in, down, up to consequent encroachment and down. So yeah, if you got in during the London session, you caught this here, you were able to get in around 790, and it rolled down to 710 or somewhere close to that. Depending on where your stop was at, you may have gotten stopped out if you were asleep at the 830, but then it went down even further. And then as it traded lower, created another breaker, and then you could have went long. Traded and closed above the new day opening gap, created a breaker, could have went long. Traded into the breaker during the macro, 1051. I'm sorry, let me get back. Oh, okay, we're done with the macro. So let me get back to the 5 minute and make sure that market structure is proper. Okay, just adjust the high there because we haven't had a proper pullback. We do now. We have a proper pullback. So now if we get a new high, then we're going to be shifting our protected low up to whatever this swing low becomes, unless it trades all the way down and takes out the protected low. love a back testing session. All right. Let's see, when can we do one of those? Oh, where does a breaker invalidate? Well, you got two areas really to look at. Because whenever you see a breaker trade, okay, hang on. Let's see what's happening here. First of all, let's measure this up. All right, we're at 78% retracement, so that's the OTE. Trade back to the breaker as well, and back to the new day opening gap. So that's a lot of things happening in one little space here. Let's do this. Okay. Extra piece of the pie. Enter on the 5 minute after we have a, okay, confirm valid high or low put in. 8:10. Okay. Yep. Oh, that's right. I was talking to Triple C. Yeah. When do you cut and run? All right. So whenever you have a breaker set up, like let's just look at this breaker. Every time you have a breaker, you always have a manipulation that went the opposite direction before confirming the breaker. So confirmation of breaker is bullish, but there was a bearish leg that was part of this setup. So whenever you're taking a breaker setup, you got to always leave room for price to retrace down and balance out this leg here. And so that's why sometimes when you see me draw up a breaker, you always see this. Right. So we give a consequent encroachment level here at 17,811 for not only price to trade back to the breaker, but it'll also want to trade back to that consequent encroachment level. And in this case, it's at the very lower edge of the breaker. So I think the easiest place to put your stop would be a couple points below the breaker. But understand that if, let's say, this manipulation leg came all the way down here, then we might be looking at this, where we know price may trade all the way down to at least consequent encroachment, but maybe even further into this before coming back up. So you could get stopped out on the breaker. So when you have that, you just have to decide whether you're going to wait on price to first balance this retracement, or I'm sorry, the manipulation leg. And once it does that, then you take the breaker setup, or you take the breaker setup, you put your stop just below the breaker and say, you know what, if it goes below, then I know it's taken out this manipulation leg. And then on the way back up, I can decide if I want to re-enter. But yeah, the choice is up to you. For me, if I saw all of this structured here, then I would look at what type of stop loss I would need underneath this retracement leg. So that would mean I couldn't get into the breaker until somewhere in the middle, and I would need a stop loss down here somewhere. So I most likely would have never even gotten into this trade until this retracement, because we got confirmation on this candle, right? And if I was looking for at least 50% of the breaker to enter, this candle wick never made it. So it wouldn't have tapped me in. It would have walked off without me. And I would have had to wait for it to come back to then tap into 50%, and then I could enter. But on the way back, what I would do then is probably then see if I could wait for price to tap down here. Now it still may never tap down there, so you may not get into the trade. But those are the kind of decisions you need to make. And if you don't like this setup, then you wait for another breaker where the manipulation leg is not that deep below the breaker. Because what if it was only like, let's say it was like this far down, right? Let's say these two candles ended where this orange box is. Then you would have the manipulation leg consequent encroachment right on top of the breaker consequent encroachment, and that's where you would take your entry. So hopefully I didn't confuse you. I said a lot and maybe talked in circles, but let me know. All right, Queen, take care. Good having you as usual. All right, Triple C, did I confuse you even more? Okay, good deal. Oh, okay. All right, Queen. We got candle bodies right on the breaker. Wick inside, candle bodies right on top. Yes, the blue and the orange, I'm drawing those manually. Yep. The 1 hour fair value gaps is coming from an indicator. Yep. So in this case, I put 3 minutes here in the corner just so we can remember which time frame that came from. Okay, since I drew the fair value, I'm sorry, the breaker on the 3 minute, and I needed to also do this retracement leg on the 3 minutes, so it's now been refined a bit. All right, move it back up to 5 minutes. Can I tell? Well, I have it measured here, and I just take the consequent encroachment, this 50% mark across. That's where I would like to see it trade to at least. Sometimes it trades lower than that, but I would at least like to see it get there before I'm satisfied that it won't come back. It does need to take out the protected low if we're going to be bearish. Yeah, it does. But as far as continuing to be bullish, it does not. What's that? Tapped OTE, consequent encroachment there. Yep. Okay, sniper. Yeah, definitely trade what you feel comfortable with and what you can see clearly. Okay, you want to look at some previous ones? Sure, let's see. All right, we have this one here that price never really traded back to. But let's see how far down it traded. So this was the one from early this morning, right? The breaker is from this low right here to this high. Then we had a dip below, sweeping the low, and then we had a trade above with a closure. On the way back down, we had price tap 50% of the breaker, and then we have manipulation leg. It tapped it to the tick right here. 17709.5. Right, see it right here. Tap right to it. Then traded back up, closing above. And from there, anyone looking at this setup should have been in. I was a little slow on not only the evaluation, but also knowing that news was coming at 10. So it had me a bit more cautious than normal. But this was the perfect entry, and you would have been at the bottom with an entry anywhere between 710 and 750. So even if you took the entry down here, you had been at 40 points before even getting out of the breaker. And so that could be a situation where you close your trade just in case it comes back and it's a fake move. Like you can close your trade here because you had already been up 40 points. But if not, we see that it ran up another 125 points after that. Let's look for another one. All right, this is the one from the London session. So from the London session, we had a high here to a low at 1625. We then, before closing yesterday around 450, around 1650, we had a trade above. And then we waited after it reopened at 1800 to it traded below and closed below, given the bearish breaker. All right, so this would be your manipulation. All right, so we had it confirmed over here at 7:30 p.m. Then you're waiting for it to trade back in. You could have taken the entry right here at the edge, but it didn't deliver very much. It kept trading back in, out, in. It got close to consequent encroachment, traded back out again. And then right as London was opening, it traded up past consequent encroachment of the breaker. And then it got right to consequent encroachment of manipulation. And as soon as it did, down it went. Traded back up, tapped the midnight open, down it went even further. Then news was announced at 8:30. So anyone who was still in and had their stop probably somewhere around here got stopped out when this 8:30 candle, ran up. That's those are the three examples for today. And we had the one from London open and the one from New York open. It tapped right on consequent encroachment and manipulation leg and off it went. Now we have not traded back to it here. The one from around 10:30, 10:45, but the London open and the New York open did. Right, Triple C, is that good now? No problem, no problem. Yep. Just wondering if this bullish breaker here, the purpose was just to push price up into the fair value gap. Since this is on the hourly frame, so it's on a higher time frame, and we got a breakthrough at the top, but then a rejection following it. It's normal to retrace after sweeping the liquidity point, but we'll have to see if price wants to continue to push higher or if pretty much got what we got. Let me go ahead and measure our current price leg and just see where we are. Oh, actually, I don't need to. We have OTE. No, I shouldn't measure because OTE, I take mine from the candle body, not from the wick. So the range, 50% is a little higher. Okay. Let's see. Yeah, Sniper, I'm looking at your entry from this morning now. And yeah, I don't see what's wrong with it. Looks pretty solid to me. And it looks spot on. It's not invalidated yet. We haven't. I mean, we just reached that apex that you have on your lower apex of the lower one of the two, and then you have price reaching its limit and then selling off. Yeah. Okay. Yeah, 10 days is not bad. It just you got to hold your discipline that long. But I mean, once you pass, you got to hold your discipline even longer to then start to realize some gains and get a payout. So yeah, 10 days is not a bad idea. Yeah. Let's see. Let's see. All right, so we are now on the TGIF. Several people asked this morning. So we did reach a new high. I think we did. Let's see what's that. 886 and a quarter. Yep. So we did reach a new high for the week. So now if we see a retracement, then we're going to go for the 20% level. If we see price wants to continue to sell off, then we would look at the 25 and 30%. So earlier this morning, price had already retraced 20%. So I told everyone that the that TGIF had probably already occurred. But now that we put in a new high, we could possibly, if it sells off this afternoon, then we'll be looking at that 20, 25, and 30% level retracement. J Stores, what's up? It's a entry model. ICT introduced everyone to. It's just you take the weekly candle, and on Friday it needs to be at either the high of the week or the low of the week, and then you look for a retracement of 20% for the weekly range. So from wick to wick. All right, so 11 o'clock, we had a retracement back down. I believe it was 11. Okay, so 11:10. And now for 30 minutes, we've been sitting right at the breaker, wondering if the breaker is actually going to hold or not. Hasn't been invalidated yet. In fact, it's not even really been a candle body traded into it. Slightly here, but not really. Mostly just wicks. Right? Curly. Yep. Yes, I do have to definitely try to remain calm for my own sanity, but also for you guys as well. 17,860. 17,860 would be your entry. Okay. Oh, right at the consequent encroachment here. Okay. Uh, Curly, how long have you been checking in? All right, so we're getting close to the end of our morning session. We got about 20 minutes left, a little bit less. So just to make sure that we don't forget, this Friday, we are at the end of our week. Some people won't be back for the afternoon session, so let's make sure that we do recognize anyone who's passed a funded challenge this week. Anyone who's gotten their funding certificate this week, let us know. 2 weeks, okay, good. You want to learn? Okay. Well, keep chiming in, and if you have questions, make sure you ask those. We have some really good members of the group here that are willing to help, as well as myself. So we'll get you on the right path, direct you to which videos you should watch to learn. Make sure you're a part of the Discord. There's a link in the description, and yep, we'll get you moving in the right direction. Hey, Vivian, what's up? Triple C, remember, is just a retracement pattern, so we're clearly bullish. The weekly candle is also bullish, so you're going to be looking for a reversal, some sort of breaker that's bearish, that's going to send price lower. And when you start seeing price move lower, you then put a Fibonacci on the weekly candle, and you mark off where 20% is as a retracement, and then that's the level that you're targeting. But first, you need a bearish breaker. You need something that's pushing price lower. Now, this 1 hour fair value gap could be that place that pushes price lower. Let's look and see if we have another one. We also have one up here at between 940 and, okay, we got a big one, 18085, right? So price is going to hit a level somewhere today. And when it hit the level, it's going to start selling off. And when it starts selling off, that's when you're going to measure where your weekly candle is, and your target would be 20% retracement. No boundaries. Yeah, keep it alive. All right. So no one passed their funded challenge this week. Okay. Okay. Yeah. No worries, Miss Goody. I just wanted to make sure if someone did pass this week that we were able to properly acknowledge that. But we'll try it again next week and see who's able to pass their challenge next week. Nope. Gorkum, nope. I'm not looking for anything, to be honest. I'm just letting price print and do what it does. Right now it's in a bearish fair value gap, so I'm being aware that maybe it'll create some sort of bearish movement. But I'm not looking for that. Gorkum is just, someone was asking about the TGIF setup. Multiple people have asked about the TGIF setup today, and so I was just explaining what it would look like if it does present itself today. Oh, Vivian passed. Vivian passed to this week. Excellent. Congratulations, Vivian, again. And seems like as far as the members in the group right now, you're the only one that passed the funded challenge this week. And you say you passed 2. That's amazing. And we got a minute left on this 5-minute candle. Let's see where it closes. And that closure also activates, or not necessarily activates, but takes us to the next minute candle where we begin our final macro of the morning session. So I'm going to go ahead and drop down to the 1 minute now. I'm checking the 4-hour and wondering whether we're in a market maker buy model. Yeah, this stream has definitely been a game changer. There you go. Good point. Just don't blow it. Miss Goody, that's it. Absolutely. Yep. And we'll just continue to add more and more people to the list each week as people are passing funding challenges. And eventually we'll have a nice group here of funded traders that can help some of the newbies as they move further in their trading journey. All right, by the end of the hour, we want to see if we can have a closure of the candle above this fair value gap. So we're no longer worried about that pushing price lower. Mm-hmm. Yeah, if you take those baby steps, especially when you get multiple accounts, those same baby steps, once you're funded, will keep you from blowing the account, and it'll start adding up to where it is a big enough number that you feel satisfied for the day, right? Because even if you just have 3 accounts and you're doing $300 a day, you're making almost 1,000 a day, which I'm sure most of us would be happy with, right? And $300 on a mini contract is only 15 points. Yep. Mm-hmm. No, Gorkum, you do not. Your accounts, as long as your account has not been blown, then it does not reset. 5 days of $200 before payout. Nope, it doesn't automatically reset. It does not. Only time it resets is if you had blown your account, and then when you do the monthly fee, then it'll automatically reset for you because your account has already been blown. No, I don't think it have to be in a row. I just think you have to get, yeah, got it. Yep, definitely, definitely, Miss Goody. Don't waste any money. Yep. All right, thank you, Gorkum. No problem, no problem. All right, we got about 5 minutes left in the session this morning. Do we have any final questions or comments? Remember, we're trying to get above this fair value gap by the end of the hour. $17,738. All right, so if we get the TGIF now, that level 20% will be 17,738. 738. All right, Queen, take care. Take care. We'll see you on Monday. Have a good weekend and rest of your day. Yeah, that's a good point. If you take five trading days of $200 profit and then you try to withdraw your money, then you won't have a buffer. You're basically back at the start of your account, and so you could blow your account just by not having a buffer. So you're going to want to definitely earn a little bit more than 1,000 before you start taking money out. All right, so it looks like we are not going to invalidate this fair value gap during this hour. So it's still available during lunch. So we'll see how price reacts and see what 12 o'clock brings us. Maybe we will get the TGIF that you guys have been calling for. So, all right, everyone, let's take a break for an hour. We'll be back at 1300 for our final session this week. Thank you all for joining this morning. I know it's Friday and you could be doing other things, but I appreciate you being here. On your way out, make sure you like the video. I haven't hounded you at all today, but if you could do that on your way out, hit the like button. If you're new or you've been here just a couple times and you're kind of on the fence, go ahead and subscribe. Make sure you have your notifications on so you're not missing any sessions. And we'll be back in an hour. Talk to you then.